Well, good morning. So the topic of the day is amending insurance laws. Say, amending the insurance laws, introduction of open architecture for insurance agents, and review of regulations relating to investment distribution, development of climate and natural disaster insurance covers are some of the agenda that the new Indian government has to fulfill. The rules and regulations governing the insurance sector should be simplified and streamlined. The new government should amend the laws governing the insurance sector and review the outdated insurance rules 1939 and make amendment in line with the new age insurance sector requirements. This 1939 insurance rules are pretty old. Before independence they were framed. Now they are almost outdated. So with over 3 decades of expertise in the Indian life insurance sector, the experts commented that the Indian government had proposed drastic changes to the two insurance laws. And they are the Insurance Act 1938 and the Insurance Regulatory and Development Authority Act 1999. So scrapping the statutory rupees 100 crore startup capital for life and general insurance and rupees 200 crore for reinsurance business, allowing different kinds of insurers including captives, changing the investment provisions are some of the major amendments proposed by the Indian government to the insurance laws. The government also proposed to allow an insurer to distribute other financial products as specified by and subject to regulations and to services related to the incidental to insurance business. Later, the government did not proceed further on the proposed amendments. So the situation is almost very crucial because the new regulations would introduce reforms in the insurance industry and benefit multiple sectors of the economy. Say, for example, allowing insurance companies to sell financial products would create a new revenue system for them and provide financial institutions with a new distribution channels. Additionally, permitting insurance companies to invest in rated debts and equity of private companies would increase capital availability for these companies and offer new investment opportunities for insurance companies. So it is hoped that the upcoming government will review the insurance bill and introduce a new insurance act to advance the Indian insurance industry to the next level. These are the reforms meant to attain operational synergies and which promote a broad-based development. The Indian insurance sector has only 60 insurance companies targeting a population of over 140 billions. The existing number of companies is still low when compared to the countries and the population potential. So besides operational synergies, the government should, in discussion with the sector regulator, that is Insurance Regulatory and Development Authority, in short it is called IRDI, also address the questions on how to convert insurance into a pull product from a push product. With insurance presentation still low in India, insurance penetration is still low in India, regional and small players in the financial sector have the potential to penetrate deeper with a local brand name and customer loyalty. Lowering the capital base and allowing such companies to float insurance companies could increase the local and rural insurance. There will also be operational synergies in the form of savings in cost. Common process, especially for the common brands, could promote operational efficiency. And life, non-life and health insurance products are allowed to operate under a single registration. So to introduce the amendments in a phased manner to monitor their impact and make necessary amendments or necessary adjustments, ensuring financial stability and compliance. The other unfinished work for the outgoing government were plenty. So now this new government has to make the efforts. See, principle-based approach on the distribution-related regulations, recognizing independent financial advisors model, recognizing brokers as a distinct distributors, giving them delegated powers of underwriting with accountability, following a graded approach, consolidating multiple channels for the rural markets, microinsurance, prime minister's scheme, distributor rating based on the quality parameters by independent rating agencies and others. So these are the work which need the attention of the government now. They are all important. You can't ignore them. Mostly these are related to the expansion of the insurance industry because the penetration is very low and government has to work on it. Principle-based approach on the distribution-related regulations, recognizing independent financial advisor models, recognizing brokers as a distinct distributors, giving them delegated powers of underwriting with accountabilities following a graded approach, consolidating multiple channels for rural markets, microinsurance, prime minister's scheme, distributor rating based on quality parameters by independent rating agencies are most important functions now. And they need the amended provisions. While IRDAI have undertaken the first phase of reforms in the non-distribution side so far, they have already started having discussions with the insurance distributors and taken their feedback. IRDAI has introduced a host of changes in its regulatory with a view to consolidate numerous regulations under one umbrella as well as take steps towards principle-based regulations. So the authority has also envisioned the major Bima Trinity project, which includes Bima Sugam, Bima Vahak and Bima Vistar. So while the regulatory framework has received its principal go-ahead from IRDAI, the focus is now on the successful implementation of this project. Changes to the Insurance Act can only be introduced subject to parliamentary approval and these are yet to be taken up at that time. So on the insurance distribution, the government should introduce open architecture for reliance, tying with multiple insurers under one license and re-evaluate the corporate agency tie-ups and bank assurance. So with the view to avoid monopolistic practices by promoter banks of insurance companies, regulations should cap the maximum business from a single insurer to 25%. As regards increasing the insurance penetration level in India is concerned, the incoming government should incentivize long-term savings by providing tax benefits, promote digital platform for seamless policy process, servicing and claim processing with user-friendly interfaces in the case of life insurance. And in the case of general insurance, microinsurance product tailored to the needs of rural and low-income population should be developed and provide subsidies to make them affordable. Government should implement advanced data analytics and artificial intelligence tools to detect and prevent insurance fraud, ensuring transparency, simplification of claim process, development of disaster risk insurance needs to be. So this is the time when on amending the insurance laws, introduction of open architecture for insurance agents, review of regulations relating to investment distribution, development of climate and natural disaster insurance covers are some of the agenda that the new government had to fulfill. The rules and regulations governing the insurance sector should be simplified and streamlined. Both the important Act, Insurance Act 1938 and the Insurance Regulatory and Development Authority Act 1999 need to be revised now. Most of the provisions are outdated. A scrapping of the statutory rupees 100 crore startup capital for life and general insurance business and rupees 200 crore reinsurance business, along with different kind of insurance including captive, changing the investment provisions for some of the major amendments proposed by the Indian government to the insurance laws are now have to be finalized. This is the right time. Because these new regulations would introduce reforms in the insurance industry and benefit multiple sectors of the economy. They will allow insurance companies to sell financial products, and this would create a new revenue stream for them to provide financial institutions with a new distribution channels. Additionally, permitting insurance companies to invest in rated debts and equity of private companies would increase capital availability for these companies and offer new investment opportunities for insurance companies. So this is the right time government should come into action and finalize the amendments and insurance laws. Thank you. Thank you very much.